Good day and welcome to this Astranti financial training video. Today, as you can see on screen, we're looking at ethics in business and we'll be posing some of the all-time great questions. What is right? What is wrong? How should we treat others? How should we conduct ourselves as human beings? And although we might not get the answer to those questions, we certainly will see how ethics relates to business. And we'll do that by looking at a variety of topics. So I'm going to run you through those right now. The first is ethics itself. We're going to see where the ideas came from and how they link to business. Before moving on to legal frameworks, the characteristics of useful information, in which we're going to learn what exactly makes good financial information. And we're going to highlight 6 qualitative characteristics of useful information. Then regulatory frameworks. Then looking at managing responsible business. And here we're going to learn how businesses can either implement or possibly even just improve their ethical codes. Values and attitudes for professional accountants. In independence, we'll look at why it's so important that external auditors and the firms they're auditing are separate. The CIMA ethical principles are our penultimate topic, and as you can probably guess, are the ethical principles set down by, yep, you guessed it, CIMA. And finally, the 7 principles of public life. But the best place to begin is at the beginning, so we shall start with ethics. And I want us to think back. I want us to imagine we're in ancient Greece now. We're standing on the Acropolis alongside Aristotle and Socrates and Plato. And the reason I want us to imagine that we're in ancient Greece is that this is where the questions I asked earlier came from, certainly in Western culture anyway. And that's because in ancient Greece, ethics was seen as much more of an important issue in a person's life than perhaps it's seen today. Perhaps in the modern life, ethical issues are quite confused. There's lots of different thoughts, even to the extent that some people doubt the existence of moral truth altogether. So what we're going to try to do in this video is apply these notions of what the ancient Greeks were thinking about to the business world, accounting and business. And we're going to begin with the law. Now, very briefly, I want you to imagine a world without law. What does it look like? Yeah, it's pretty scary, isn't it? And societies developed these frameworks of law so behavior can be regulated. And of course, this helps to stop human nature escalating out of control. It also protects society from people conducting illicit behavior. And so in the terms of ethics, the law really is the minimum standard of behavior. Companies have to abide by the law. So this is the minimum ethical standpoint because they have to do it. Now, in terms of companies, if we think to financial statements, they often have to have specific legal requirements in the way that they're structured and in the way of, and in the information that's put into it, the certain content that has to be put into it. And this is set out in the Companies Act. So it's not really ethical behavior for a company to put in the content in these financial statements or structure it a certain way because they have to do it. This is the bare minimum. But organizations don't just have to abide by the law. They also have to abide by regulations set from within their own industry. And the regulations are normally set by professional bodies and the organizations in any given industry, and an organization from that industry would be expected to abide by them, just like they're expected to abide by the law. Now, just as an example, you will have to abide by the regulations that CIMA sets down. You'll have to abide by its code of conduct. And in fact, we're going to look at CIMA's ethical principles much later on in the video. But if we return to our example of financial reporting, we've already seen that in terms of financial reporting, there's legal obligations, but there will also be regulatory obligations. So accounting standards are clear sets of regulations that will be applicable to the accounting industry, which would have to be followed. So we can see so far an organisation has to abide by the law, and it has to abide by regulations that have been set down by the industry. But now we come on to ethical behaviour. And if we think of this as a staircase, the law is at the bottom, that's the minimum requirements. The next step up is regulations, which is set inside the industry themselves. And then the highest step is ethical behaviour. And that's because it meets the highest level of standards. And also what's really important is they're not forced, an organisation, is not forced to abide by these standards. They implement them themselves. So it is the highest level of conduct. Now, if we return to our financial reporting example, we've seen, haven't we, there's legal requirements and regulatory requirements. But using ethical behaviour, an organisation might say, well, actually, I don't feel that the law and regulations go far enough. Perhaps adding more information would give the investors who are using these documents an extra level of transparency that would really help them make sound, objective decisions. They might decide that's far better for the investors. And so we can see here that ethics is about applying objectivity. It's about applying honesty, and it's about applying openness, and it's about acting to the highest set of standards that you can. So there we go, the law, regulations, and ethical behaviour. We're now going to move on to professional ethics, because professional ethics are standards of conduct agreed by professions. Now, of course, the professions could be law or medicine, or the ones you're going to get to know, accountancy. And as we'll see later on in the video, CIMA's Code of Ethics lays down the professional ethics required by accountants. However, just because there are principles set down by professional bodies, it doesn't mean that other principles should be ignored. Remember, we still have our own personal moral standards to live up to. We have societal moral standards to live up to. And it's vital we don't forget that. We're going to see an example in a bit of how an individual fell foul of business ethics, okay? But before we do, I just want to highlight some common concerns that face business ethics. So firstly, the treatment of workers. Of course, it's up to business to make sure that they treat their workers fairly. Don't pay them unfairly, don't make them work in any poor conditions, don't make them exceed hours that's legally not appropriate for them to exceed. It's also, and hopefully I don't have to remind you of this one, that an organisation doesn't pay or it doesn't take bribes. Because of course that just is totally unethical, as it sidesteps all the legal requirements, which remember is the minimum standards and regulatory standards, as well as, of course, it doesn't even get near higher ethical behaviours, so really avoid bribery. Number 3 is making sure that employees are safe at work, not putting employees in harm's way by unsafe environments, and making sure that organisations themselves take it upon themselves to instigate independent safety audits, instigating and implementing health and safety policies to make sure employees are as safe as can possibly be. Number 4 is respecting people's personal data. Of course, we've seen lots of incidents of this in the news where global tech giants have been passing on or selling customers' data without their knowledge, and of course it's vital they don't do this, because customers deserve to have their details safely taken care of, unless of course they've given their consent to have those details sold. And also, of course, organizations must make sure that they protect the customer's data from other dangers such as hackers or cyber criminals. And of course, it goes without saying that it's up to an organization to make sure that they implement appropriate and fair advertising. For example, is it appropriate for an organization to advertise sugary drinks in a children's cartoon program? Well, it's probably not, is it? And number 6 is good professional conduct and honesty. Of course, organizations should make sure that they avoid misleading their customers through false advertising or false or dodgy sales practices. You've got to make sure that they respect the customer, respect their refunds that they've said they will give, so that the customer can trust them. So what we've seen here is, in fact, ethics do go beyond law, beyond regulations. And it's up to people also to make sure what they're doing lives up to their own personal standards of what's right and what's wrong. It's down to the individual. How does the individual conduct themselves? Because an organization will set out principles, but it's up to the individual to abide by those principles. Because if not, they will have to take responsibility for their actions. And it's also up to the individual to not abide by a principle laid down by an organization if they see it as unethical. So let me give you an example of someone who didn't live up to their own personal standards and didn't question organization's behavior. And we've got a name on screen, Jerome Kerviel. Apologies if I pronounced that slightly incorrectly. Now, Jerome Kerviel worked at a bank. That's absolutely fine. There's nothing wrong with that. The bank was called Société Générale. The problem was the behavior at the bank. So the bank was using funds that had been entrusted to it by its customers in extremely high-risk investment ventures involving huge sums of money. Now, it was unethical because the customers weren't aware of the danger that their funds were placed in. Now, Kerviel saw this. And Kerviel didn't say, hold on, this is wrong. Kerviel joined in. And in fact was caught after he lost billions of euros of the banks and of the customers. Now, Kerviel blamed the culture of the bank. He said it was an unethical culture to start with, and that's what prompted his actions. But however, the people that prosecuted him said he alone was responsible for his actions. So you can see, can't you, the importance, even though there's principles laid down by an organization, still up to the individual's moral code. So why are ethics important in business is our next question. And it all boils down to one thing, really: reputation. Let's give you a very quick example. Would you entrust them with your money knowing what you now know about them? No, you wouldn't, would you? Their reputation has been spoilt. A business's reputation is what other people think and say about it. And it's the thing that gives a business license to do business. Let's imagine that an insurance company is trying to gain a competitive advantage. And it's doing this by putting lots of little hidden costs in the small print of its policies. It's trying to get out of making payments in case of a claim. It's trying to put lots of little loopholes in. Now, that's gaining a competitive advantage. But once its customers find out, what will that do to its reputation? You can see there's a balance, can't you? You can't take it too far, because if you lose your reputation, you'll lose your customers, and they certainly wouldn't use that insurance company anymore. But in fact, there are really good business advantages for practicing good ethics. And the first of those is that it avoids legal action. Let's think of our insurance company hiding their little loopholes, hiding their little claims to make money in the small print of a contract. Now, that may not be technically illegal, but I'm sure you'll agree it is not transparent. And because it's not transparent, it's not ethical. And actually, they could be taken to a court of law by their customers because they've misled, their customers, and so they could be challenged in the courts for mis-selling their product or mis-selling a service. Now, of course, an ethical organization wouldn't have this problem, because if you think back to the ethics principles that we looked at the very beginning of this video, one of those is openness. So an ethical company strives to be transparent. They're going above and beyond the bare minimum legal requirements. So, of course, the risk of legal action is reduced. And the next one is reputation. And we've just talked about the damage that poor reputation can cause a company. And what we're thinking about here is the unofficial court of public opinion. Because if you act ethically, of course, then your business is going to avoid bad publicity. And of course, this bad publicity could result in damage to reputation. And without the reputation, remember, there is no license to do business. Customers will avoid you. So you being ethical protects an organization's reputation. And that's the key thing that links them to their customers. Number 3 is that it produces a good feeling amongst the staff. Now, what happens if an organization was forcing its employees to go against their own personal moral code? How do you think that would make them feel? Well, it'd be creating cognitive dissonance, wouldn't it? It'd be making staff act against their own will, which would make them feel stressed, unhappy. And if they're stressed and unhappy, are they going to be working as well? No. Will the company have low rates of turnover? No. There'll probably be lots of people leaving. So in any case, the organization, will get high HR costs. And also, stressed workers often go off sick. And again, that creates cost for the staff. So this good feeling that ethical behavior generates really pays for itself, because you should have less stressed staff, lower rates of turnover, which reduce HR costs. Productivity should increase. And it can also be used as competitive advantage. Now, I don't know if you're aware of the UK-based retailer Body Shop, but if you are, I'm sure you're already aware of what I'm talking about. Because Body Shop's main USP, its unique selling point, is that they don't test on animals. They've turned that into their point of difference, which has enabled them to get on practically every high street in the United Kingdom. The bank, Societe Generale, would you use their services? So there we go, 4 advantages of practicing good ethics in business. But we won't stop there. We're going to have a real world example now, and this example is called Chicken Wars. Now, don't worry, I'm not actually talking about a physical fight between giant chickens. What we're talking about here is a war between 2 supermarket chains. So why are we calling it Chicken Wars? Well, the reason is that these 2 supermarket chains, Tesco and Asda, fought their war over chicken prices, and their aim was to produce and sell, to sell a chicken for as cheaply as possible. And many would say that actually Asda won the war, because they dropped the price point of selling a chicken to £3. Tesco couldn't beat that. They couldn't drop their price anymore. They couldn't sell that chicken for any less than Asda. So Asda won, didn't they? Well, no. And here we're going to see another reason why ethics is important in business, because actually what Tesco did was to release a statement that it was not possible to produce a healthy chicken for under £3. What Tesco's were doing was using their ethical codes to differentiate themselves from Asda, and implicitly, certainly not explicitly, were implicitly saying, well, hold on a minute. How well can Asda be treating these chickens? How well can Asda be treating their suppliers? We, of course, are charging more, but we're ensuring the health of the chickens. We're making sure that the suppliers are treated fairly. And as such, we're boosting their own reputation by making Asda seem not very ethical. It made Tesco seem like they were holding themselves to a higher ethical code and building a sense of trust between themselves and customers of supermarkets in the UK. So it's vital that one aspect of strategic decision making involves reviewing whether the decisions are in fact ethically the right thing to do. And it shouldn't be just assumed that ethics costs more or is going to cost the organisation more. It can help, as we've seen with our 4 advantages of practicing good ethics. So now let's have a look at ethical control over staff. How do we make sure that the decisions that are made all the way throughout an organisation are ethical? And there are 3 ways to make sure that all decisions made within an organisation are indeed ethical. And the first one is something we've kept coming back to, isn't it? Personal ethics. And of course, we know, don't we, that personal ethics are the ethics held by the individual themselves. Now, if an organisation starts at the top and employs directors who have strong moral values, the strategic decisions that they make are naturally going to incorporate those individuals' moral codes. Secondly, we've got an organisational culture. Now, the culture really is the combination of the beliefs, the values and the standards of the behaviour that is found within an organisation. Now, behaviours are often affected and influenced by what is seen as right and what is seen as wrong within a group of employees or indeed the directors. Now, a group ethical stance can develop, and this can teach others what is acceptable and what isn't acceptable. And this can be done through a statement of values, so the organisation can actually write down what they believe in, what they stand for. And this can form part of the organisation's mission statement. They also should communicate their ethical expectations. They should say what they should expect to happen. And we've already touched on the next point with the directors, but it's also vital that the chairman or the CEO should also lead the way by conducting themselves ethically. Could we just look back and think about the CEO conducting themselves effectively and how that would change group culture? We saw, didn't we, with Jerome Kerviel? He says he saw how the group was acting. They'd obviously made the decision on what they thought was acceptable. And then he also went the same way. He thought, okay, this is acceptable behaviour, I can act in this way. But if the CEO is setting an example from the very top, then of course individuals should fall into line with the right behaviour, not the wrong behaviour. And there can also be things such as organisational systems. So ethics can be incorporated into the review and analysis procedures as part of making decisions. We've just seen that, haven't we, with chicken wars? In fact, actually, all decisions can be imbued with, actually, is this ethically correct? Should Asda have thought to themselves, well, we've got the price down, we've made a decision to really go hard on cost leadership for chickens, but is it the right thing to do? If they'd incorporated it into the review and analysis part of the decision-making process, then perhaps they wouldn't have brought the price so low, but in fact they wouldn't have let Tesco take the upper hand, rather. And number 3 is ethical code. Now, an ethical code is quite simply a set of guidelines that staff are given, and it tells them what they should and what they shouldn't do. Now, it also takes a point from above. It needs to be well communicated. Obviously, the staff need to be aware it exists. So, obviously, there's a good time for this to happen would be in staff induction. And it also should be readily available either on the company's intranet or even as a printed hard copy. Now, in some accountancy firms, staff are sometimes even required to sign off on companies' ethical codes, because then, of course, it encourages buy-in. The individual is really made aware of what the organisation expects and has to conform. It's saying, yes, I will conform by signing this document. And if an ethical code is broken, then disciplinary action should be taken. Otherwise, there's no real motivation for staff to follow the codes that an organisation has set down. So there we go. 1, 2, 3 ways to make sure staff use ethics on a day-to-day basis. So there we go. Let's zoom out there. Oh, we've gone right to the main screen. We can see we've come to the end of ethics.